Hey, what's up, YouTube? This is Neil Hamilton with Get Technical, brought to you by Benzinga. How do you say it?
Benzinga. You got to fit the N in there. You know, it's not Bazinga. It's not Bozinga. Not Bojangles.
Although I like Bojangles a lot.
You do?
Oh, man. Every time that I'm driving to the south, that's where you find me, buddy. We're stopping.
In the Bojang. You see that on the gas station, you're like, we're going there.
Yeah. Yeah. Big fan. What's up, guys? Happy Monday. We are looking good. Tickers I like right now, right off the giddy up, obvious ones. And if you don't know them, here you go. Wish, AMC, BBIG, AHT. So what was it? I always mix up IBR and IBR. All right. I like it. But let's look back at Wish. So you know, a little background. We were producer AB and I are talking about shows that we're watching right now. So guys, some show recommendations. Check out Wu-Tang. If you're a Wu-Tang fan, this is gonna be the best thing that ever happened to you. Watch that on Hulu. I just finished the first season. Sheesh, so good. And then what was yours?
I'm watching Snowfall right now, which I don't recommend watching if you're like faint of heart, if you don't like, you know, some darkness in your show, some violence.
That's good for people. That's good. People need to learn. So I think that's good. Watch Snowfall with your whole family. Get them in there. If you've got kids, elementary school, watch it with them. I think that's good content. Guys, looking at Wish, check it out. This is the State of the Union address.
Did you know that Wish is the #1 trending ticker on Reddit right now?
I actually didn't know that, but in no way am I surprised.
Well, now you know.
Social media be crazy. So look, guys, we got this channel here coming from that big spike off with Wish, and I'm on the hourly chart. I'm just going to break down what's going on. All right, just so you guys, when you see this happening, you know what to do. I'm not in Wish. I missed the Wish boat. I'm in AHT. I'm in BBIG just long. I think I have BBIG calls.
Wait, BBIG or BIIG?
BBIG.
Oh, is that Big Commerce?
No. BBIG is Binco Ventures.
Oh, well, BIIG is Biogen, which has also been ripping. That's why I was confused.
BIIG? No, it's BGE. BIGN. What is Biogen? Biogen is BIIB.
BIIB.
Bib. Right. Bib on the Biogen. All right. So, like, where was I? So, guys, we're looking at Wish right now. I got the hourly chart. Very good one to use. So, what we see right now, I mean, I can walk you through this whole freaking thing. This whole thing fits the Wyckoff model, if you're familiar with that. If you're familiar with Wyckoff theory at all, I could break this down like that, but really I'll just treat this as a rounding bottom, which Wyckoff fits into. So we have some accumulation going up, and then there's going to be some selling, some profit taking. That's what creates this little channel. This channel is not the end. This shakes out all the weak hands, shakes out all the people that are not going to go much longer. And then we begin a second phase of markup. So what I would say, if this fits the model, is what you're going to get. What you're looking for is, number one, when you see this selling channel, you want to set your line of resistance up top. That's tough with Wish because it's so low price and the volatility has been insane. So it's not going to be a perfect, pretty little picture like you find in your textbook. But guys, I drew the black dotted lines on it. You guys can kind of see the channel, right? Like, you can see what's happening. Yes, there are times that it goes out of it and gets kind of hairy and all that kind of stuff. But you could see the range here, the sloping range of selling. When you get that breakout above that, that's your entry. That's your go long signal. And that's when we go up. And then you're targeting this high in the range. Now, Wish is a special case, right? Because we've got this big red candle. that can be a target, but you know me, guys. I like to keep it a little bit conservative. I'll sell before. I'll take 20%, even if I think it'll go to 90% on trades. And you don't have to sell all of it. So like this is a situation where if you're targeting this level, you could sell 50% of your shares, you could sell 20% of your shares. If I own new, and then keep some and let some ride. And then if it's happening, then you're watching for your levels going up, and then maybe you can get back in. But that's kind of how that works. Let me delete all that. I just want to keep the channels here. Damn, we got some nice beats. I just want to I'm just testing a thing. You guys don't pay attention if you don't want to. I'm just testing a thing. Yeah. Okay. So check this out, guys. So the base. So you can see how we started this impulsive move right here with this green candle. This is hourly once again. All right. So this is like the first hourly candle on June 8th. We started this awesome impulsive move up here, spiked super high, and then sold off like crazy. Now what I'm trying to do here, whoops, is show you that the measurement of this impulse, not for this big selling, but right about where you hit this real resistance. This was some extreme volatility, but for the meat of the action, is like right about here, right? So that measured move takes me from the breakout point, which is where we break out of this descending selling channel, is just about to this high. It's just about to it. So I'm drawing it just based on that measure move. It's something like this. So guys, when you get these breakouts out of these broad bottoms and you have the volume behind it, which is fantastic, what you're looking for, like I said, is that initial impulse, that initial selling, and then another impulsive move up. Now the selling after that could either be really tight, it could be middling, or it could be like a super big sell-off. But you're going to watch for the bottom on that super big sell-off to see if we do in fact have a trend with Wish, which we very well might have. So watch out for Wish. I do see more channels like this ahead. When you see stuff like this, obviously set your stop losses, maybe even take a short position if that's what you want to do with like some puts. The idea is to make money off of these things, but overall a net long position, it would be reasonable to maintain a net long position even when we see these impulses, because these are all part of the process of coming back from these extreme broad bases where we're like super oversold. So yeah, there you go. Wish looking great. Some great trades there. Give me a 1 in chat if you got into Wish. What's AMC's price target? Kevin Berry asks. Yeah, Daniel, you've always been calling them. You got the best calls. I know. I've seen you saying Wish in chat. Okay, so AMC price target. Okay, look. Do you want the short-term price target?
I want the moon.
So I think we went over this because I have some of my drawings here. So I'm going to delete all my drawings. AMC, this is called a V-shaped reversal. All right, V-shaped reversal. Watch for this on every single one of these stocks because they all go up and then they have these big sell-offs. All right, and you want to find the bottom for that bounce. All right, this is how you find the bounce on a stock like AMC. And this would be, this formation would have started on June 10th. Wait, 10? Yeah, this formation would have started on June 10th. So the V looks like this. And let me whatever. So you got your ledge, and then you've got your cliff, and then you're going to have one candle that's going to have a wick that goes down super far. That's going to stick down. And that's this one right here. So it always has like, it's sort of like, it reminds me of like a golf tee. There's always like a golf tee like holding it up your bounce. And then the next thing that you're going to have is your immediate bounce, a shelf, bounce, shelf. And then after that, you're watching all of your technical indicators to see if you're too overbought, too oversold, to see where you go from there. In this case, we got a little bit of a shelf, and then what happened next was an impulse and move, and then a big fat gap up. All right, and we're still on the hourly chart. This works on every time frame. If you're day trading, same exact thing. You can look at a 10-minute, 1 minute, whatever, 30-second. Same thing. So we got this gap up. Price target, I mean, kind of already been hit. So what we've hit is this previous resistance right here. We're exactly at this level where we were. So now what I want to see is I want to see some consolidation. Honestly, I wouldn't mind if we got back down to these levels, maybe something a little bit like this. We shall see how tight this flag is that's starting to form. Because this overboughtness down here makes me think that we might be running out of steam. And look at the volume. Here, let me double click on this. You always want high volume to get big results. High volume that gets low results, no good. In this case, we got the results. We got that high volume with big moves with gaps up. Right now, we've got low sell volume, and the RSI got right just about to the overbought level on the hourly, starting to come down. So I would be looking for that RSI to come down a bit, and for some more buyers to come in. So watch this one. There's no reason that it can't break above this level, and then you can start targeting something a bit higher, like that. But yeah, I mean, this is an extremely volatile stock. When people buy it, they buy a lot of shares. When people sell it, they sell a lot of shares. Ron, way to go.
Shout out Ron. That's my boy.
Does AMC hit at least 10K? All right. So yeah, Daniel, you get credit. You've been calling Wish for weeks. Yes. You're the man. All right, guys. How high do you think AMC will go up? I just gave you levels. There you go. I think that if it breaks out above 60 on above average volume, you can target 68.7 easily. Now let's switch over to the day. Let's see if we can. Do you get these calls?
This scam, like mine says something different. Mine says like spam risk. What provider do you have?
Hello?
Dale.
What?
Dale.
Yeah, good afternoon. This is James from Weather Dash. We're doing roof inspections. It's at no cost. If you do have any storm damage, we'll show how to help you out. Today at 2 p.m. works for you, or 6 p.m. better today?
Yeah, why don't you do 2 p.m.?
Okay, now, sir, our inspector will show you his license when he arrives, along with his credentials and a group of neighbors that we're working with. What type of roof do you have, sir? Do you have shingles like the rest of your neighbors, or do you have something more durable, like tile or metal?
Yeah, I've got some, I think they're steel shingles. I'm not really sure. I don't know. They're some type of metal. Okay, so 2 p.m. credentials. That sounds really good. Are you guys able to come to the downtown Detroit area?
Pardon me?
Are you able to come to the downtown Detroit area?
No, sir. We're working. I'm verifying the address at 4936 Aquila Drive, sir, Bridgeton Park, Illinois. Is that where your homeowner at?
Probably. Can I ask how you got my number?
Yes, sir. Anytime a storm hits, we go to the public records because we are licensed in Richmond Park. the inspectors give us a list of the homeowners in the affected area. Does that make sense?
Yeah. Okay. Yeah, I think they gave you a bad number.
Oh, okay, sir. So you're not in the Richmond Park area?
No, I'm not. I'm sorry. I wish I was. It sounds like you guys. I mean, I'd love to get my shingles taken. Get a good look at my shingles.
How
Could
far
use
off
that.
are you from Richmond Park, sir?
I don't know. Hold on one sec. It's Richmond Park? Oh, you hung up on me. Okay. Well, that sucks. No one wants to look at my shingles. What the fuck is wrong with me? All right, guys. Let's keep rolling here.
Wow.
I mean, bless his heart, that guy sounded just like a South Park character. You know, like he sounds like when they do that episode where everyone's like going out California way. When they're doing like the Dust Bowl episode. Oh, I hear they got internet out California way. The guy sounded just like that. All right, dudes and dudettes. Okay, so you're asking me to give you a price target on one of the most volatile stocks on the planet. I'm not falling for it. Yeah, guys, shoot us a like if you enjoy this content. Please like the like it.
And if you know anyone that can check out Neil's shingles, give us a shout out. Email us at shows@benzinga.com. Better yet, I think Spencer might need his shingles checked out as well. So shoot Spencer an email.
I pranked Jason like last week, and he called me today. He was pissed because I forgot to like tell him it was a prank. I had someone else text him and like make fun of him. Jason Rasnick. I don't want to disclose until I talk to Jason. Guys, look, AMC, little breakout action. Ain't nothing wrong with having a good time. But for real, if you get a solid close above the $60.50, you're going to target this next high. You know, that's how you do this. But you want to have the volume behind you. All right. Remember, if you got high volume and the moves aren't big, something's wrong. You want high effort to get high results on the price action. Okay, guys. Patrick says AMC going to $100,000 a share.
No, that's the floor. I mean, the ceiling is who knows.
Oh. Okay. All right. What ticker? What? Someone had another ticker that I actually liked that I wanted to look at.
We could look at Corsair. CSRS.
Oh yeah. Okay, I see what the show has become. CSRS. All right. Wait, Corsair.
I said it wrong.
By the way, Corsair. Love the company. We've been here before, ladies and gents. It happened. Kind of.
And we pointed out, what do we call that, chat? That, my friends, is a big, fat, juicy bottom. Rat snack.
Yeah, baby. Look at it on the weekly. Yeah, so let's see if it hit its price target. So how do you set a price target when you see this known pattern? Well, you go from this blue line that I set, which is the main level of support, and then you add that depth. Well, actually, hold on, let me back up. You set your neckline, which is the main level of resistance, and you set your support line, which is your main level of support, and you measure the difference between those two prices. So you can literally subtract this, or you can subtract this lower price from this larger price. But what I like to do is just draw a line and then add that to the neckline. And look, that's what we're holding as support right now. Kind of. It just dropped down past it. So that was the price target. So we went way past the price target. The top of the wick is the highest it's gotten to today. So we jetted past that on all of the power, the buying power that comes with social media. I'm looking at the weekly though. Hold on. Yeah, that candle is just for the week because today is Monday, of course. So yeah, I mean, this was the price target. We'll see if it holds it. A really good sign would be if we get some consolidation that holds this. But you know what? If it dips below it, that's part of the plan. That's what the big boys are doing. big boys, big gals, whatever, but they're not the retail trader's friend. They'll let it dip down here to hit some stop losses because they know that everyone's doing the textbook stop losses at this level. So it might do that dip, but then that's when the next move comes. That's all there is to it. That's what I'm saying on Corsair. So I would say watch for a dip, but it might come to like a support level. If it stops you out, if you're in it right now, watch for signs that it's going to break out of this channel and continue up. The whole idea here, guys, we're always trying to find, are we establishing an upward trend, and what's the soonest we can get in at the best price? And like this looks like the beginning of an upward trend. All right,
that's a huge volume spike we had today.
Insane. Yeah, so we'll want to watch it here. Let's look at what it looks like over the
that's
hours.
like,
so it's
what is that, like 50 times its normal volume?
Oh yeah,
at least.
And we're looking good. So you can see that we're sort of trading right around that area. It keeps hitting that price target. So guys, that is just the power of just like price structure and patterns, and they just be working like that. All right. So it's hitting that price target, which was about $40 or $39.50 is what I'll say. Looking like it wants to hold above it on the hourly. Super duper overbought. So we shall see. With this kind of stuff, you want to check the end of the day when the volume comes back in. Right now, all the Wall Street guys are they're all eating bagels and cheeseburgers or whatever the hell Wall Street, and steak or caviar. So we want to see what it looks like when everyone gets back to their desk and starts actively trading. Check
yourself before you wreck yourself.
That's right.
And yeah, Neil, I don't know. I was like, oh, Corsair, they must have announced something really cool at E3. Like went into the news. Nope. Silly me. Just a simple little Reddit post. Nothing with E3. No news, but shout out WSB.
All right, everybody. I got sends like a million times. I'm not sure if it's the same people. And guys, if we could get this thing to 125 likes, I will have a professional chess player give you up to 4 trade ideas. If we can get this to 125 likes. Yo, don't. How do you, Aaron? Did it occur to you that I say bagel differently than other people? Bagel.
Yeah. No, we've been over it before. I wasn't going to bring attention to it. But yeah, definitely. Bagel.
Hey, can you just say it like normally, like you normally do?
I say bagel.
Bagel.
No, you said like bagel.
All right, guys. I'm actually a Russian spy. My whole family is fake. My mom, I just work with her. We were planted here to spy on Benzinga as a way to infiltrate the financial markets. Follow me on Twitter at Neil's Tweets for more election tampering. All right, guys. All right, I'm looking at sends. Are you happy, you ravenous animal? I don't know if it's one person just absolutely spam. Ooh, okay. You already know. Like, what do you want? Are you here for validation when you put in something like sends? Yes, this is sick. Yes, this is the ideal trade. Yes, I dream about price patterns like this. All right, this is beautiful. All right, this is roundy bottom action. It's gorgeous. Do we have previous highs? Yes. All right. Are we approaching them? Yes. Am I going to use the Fibonacci retracement tool to get an idea of where we are? Yes, I am going to do that right now. So I'm going to anchor my Fibonacci retracement tool at the all-time high, which was back in June of 18. And then I'm going to go to the all-time low, which is during this beautiful, broad, look at this. Just tight trading here down at this low. Insane. Absolutely gorgeous. And then see how this lines up. So we can see that this little channel, which is the new sort of rounding bottom that I'm assuming you guys were trading, some of you guys, I have not been, but this stock has come up a lot on the show. This nice little channel kind of trading within this level on the Fibonacci. And I can do something now, which I'm actually, that wasn't even the all-time high. The all-time high was more recent. There we go. And when we anchor it at that all-time high, we can see that this Fibonacci level is the resistance. Very, very nice little rounding or double bottom, however you want to say it. It's still going to have the same price levels. And then as we came out, we got that big gap up. What I will warn is that when you're coming out of these lows and you get the two gap ups without considerable consolidation, watch that volume. Watch for that volume to dry up. Watch for the fade. So two gap up starts to look like an exhaustion gap. Second one starts to look like exhaustion. First one, get excited. Second one, potentially bagel holding territory. So I would watch for a fade down to this level on the Fibonacci. All right. So we might get something similar to what we had with AMC on the hourly. I think it was AMC, where we had just a selling channel, something kind of like that. And I would look for something like that to go long. Right now, not prime time to go long. Right now is bag holder trap, in my humble opinion. Yo, Stacy, what are you talking about my mom for? Do you know her? Did I say something wrong? Mom, seriously, if you're watching this, why do I say bagel so bad? What is wrong with me? Why'd you let me do this? Yeah, Sens needs to consolidate, says dog with toupee. All right, guys. How many likes are we at? Hey, producer AB.
Yes, sir.
How many likes are we at?
Let me do my little checking around.
Everyone, look, and if you haven't liked the video yet, let's get a like for the show's producer AB.
We are at 129 likes. 132 likes.
All right.
I guess that's good enough. That's good enough.
Oh, 139.
Yo. Gee. Should I hold AMCM up 54K right now? I like to keep my stop losses tight. Real tight stop losses is what I like. All right, so
wait, Neil, do you own a drill?
Yeah, I have multiple drills.
Oh, like you got like the drill bits, if you need to like drill a hole versus like just
I have an impact drill. I got a power drill. Yeah, Jim Stock's asking the question that this is what I asked this. Okay, so I interview a lot of people that want to work at Benzinga every day. All right, this is always my final question. I always ask at the end. I say, out on a scale of 1 to 10, how bad do you want to work at this company? And then I say, but do you own a drill? All right. AB is referring to the power tools, Neil.
Yeah. Do you know what a drill is? I can teach you.
I know the drill. All right. Enough of this nonsense. Let's get my man Chris Capri on the show.
Chris Capri.
What's up? How we doing?
Doing great. How are you doing over there?
I'm good, and I do own a drill.
Yes. Do you have the belt attachment on it?
I do not have the belt attachment. Yeah, I'm not that fashionable. By the way, do you know who invented the power drill?
Dow Jones.
Jason Raznick.
No. NASA.
Oh,
if you think about it, they had to do a lot of things in space where they had to fix things, but you can't have extension cords when you're kind of floating outside your ship. So they had to come up with an ingenious way to actually have a power drill work without a cord. And so they came up with the power drill.
Damn.
Yeah. There's a good book called Accessories to Wars by Neil deGrasse Tyson, where he talks about how science and NASA and all these things have invented all kinds of technology. Some of them great, some have been used for military purposes, but a lot of technologies that we have experienced as humans, such as the power drill, invented by NASA.
Oh, I got two more, Chris.
Uh-oh.
From NASA.
Let's go.
Cool. Let's hear it.
Tang, the drink.
Yep.
They should be fired for that.
Yeah.
What?
No,
You
ain't
don't like-
nobody drinking Tang these days.
You don't
I
like
don't
to-
think you can get Tang unless you go to like a army surplus
Who's
store.
using a power drill today versus who's drinking Tang? It's
All
not.
right, what about
you
this
got
one- this-
astronauts drinking Tang. And
This
using
one's a
power
little
drills
bit more
every day.
practical. Second one's a little bit more practical. Braces, like for your teeth.
NASA did that.
Well, the wire that's used in the braces, because it's like a really thin wire that's also like strong enough to support a lot of pressure and force. They didn't make it for dental purposes, but the wire that's used in braces was invented by NASA.
All right,
This is why we should give them money, because they invent all kinds of downstream tech that we use.
guys.
Like
it-
the
invest in
microwave that
exploration.
you use today, that was actually it was kind of developed by the military, because dudes would be sitting on the ship in front of the radar dishes back in the day. They'd have like chocolate in their pockets, and they're like, "Hey, why is my chocolate melting as I'm close to the radar dish?" And they figured out microwave signals create heat. Hence, that led to the whole microwave that now almost everybody uses today. So
and none of them could have kids after that. So guys, that's we'll hit you with NASA facts. Follow us on our respective Twitters. Producer AB will drop everyone's Twitter handles in chat right now. But Chris Capri, world of options and price movement. What is on your mind today?
So we made a promise last week that we would teach the basics of neutral option trading strategies, particularly iron condors and iron butterflies. So that's what we're going to talk about today. Before we do, G. Aguilar had a question, and this is an important question. So he said, "Hey, I bought 1,000 shares of AMC at $2. I'm up about 54K right now. Should I hold AMC?" And the answer to that question, Mr. G. Aguilar, is, has your trade idea been invalidated? If your trade idea hasn't been invalidated, then you should stay in the trade. You shouldn't be staying in the trade because of the money itself. That's not like, hey, I'm up 54K, I'm up 100K, I'm up 200K. That should never be the reason you get in or get out of a trade. The reason you get out of a trade is that your trade idea about AMC is invalidated. If it's not invalidated, you stay in the trade. If it's invalidated, you get out, whether you're up 54K, 100K, or $5. That's the like core rule when it comes to trading, whether you should get in or out. Your idea is invalidated, you're out. Not invalidated, you stay in. So that's the answer to your question there.
Boom. All right, let's hit those trade ideas. Let's see what's on your radar.
Okay, so iron butterfly, iron condor are
Share your screen.
relatively.
Make sure you share your screen.
Oh my gosh, I'm so silly about that.
Rookie.
I know. Who would have thought? After all these years. Okay, I think you see the screen now, Spotify and
Yes, sir.
Netflix. Yes. Okay,
Yeah.
so iron butterflies, iron condors are delta neutral trading strategies. What that basically means is that, or they're almost delta neutral trading strategies. The whole idea of them really is that you can make money when the market goes sideways. And as you can see, the market goes sideways for a long period of time. This is July last year. We're almost at a year now that Netflix has been stuck between 474 and 555. That's a $75 range. And so maybe you're long-term bullish on this. Maybe you own Netflix shares, but Netflix isn't. Let's just say Netflix is not offering a dividend. Are they offering a dividend? They are not. Okay, they're smart. So they're not offering a dividend. You're making no money on your long shares on this trade. You're making no capital appreciation. And you think that Netflix could be stuck inside this range for a while. Well, you don't want to be long calls during that time period. You don't want to be short calls. You don't want to be long puts or short puts, because it's not going to really push directionally in your favor. So what do you want to do when the market goes sideways? Switch to neutral option strategies. And so an iron butterfly and iron condor are relatively the same thing with small differences. We'll go over iron butterfly first, and let me move this over to get some white space, and then we'll explain what this means. So we'll go IB for iron butterfly. This is where you basically sell two of the same price strikes. So you're going to sell, let's say, 2 calls, and then you're going to buy further out of the money calls. So basically what it looks like is this from a P&L diagram in options. So this is price, as you all know from your options This is the P&L right here. And this is your 0 point, your break even. Now, let's say we're looking at the 100, 200, and 300 strikes. Okay. In an iron butterfly, you're going to sell the 200 and buy the 100. Then you're going to sell the 200 and buy the 300. And so what it comes is it creates a payoff or profit and loss diagram that looks like this. It's like a tent. And that's because you're selling the same center strikes. And then you have strikes on the upside and strikes to the downside. Basically what you want is, the basic P&L diagram should always look like that. What you want is you want the stock, and this is your break-even point. You want the stock to close between these two strikes. If it closes within these strikes, you get a profit. If it closes outside these strikes, you take a loss. And so you would be trading this in a way where there's generally two ways or two environments you want to trade in Iron Butterfly. One, which is an already established corrective structure like we have right now. This is a corrective structure. It's where a corrective structure is where there is no heavy imbalance to the buy or the sell side on the order flow. There's nobody in control. You have relatively an equal amount of buyers and sellers on both sides of the market. And they're basically ping-ponging between support and resistance because the sellers are saying, we're at 550, 560, 570. Netflix is overvalued. We're going to come in with size and push this thing down. Then Netflix gets down here between, say, 490, 500, and say 475. And the buyers come in. They're like, Netflix is undervalued at 475. We're going to come in with size, more size than you sellers have, and push it back up. And it creates this ping-pong effect where sellers say, hey, this is the ceiling. Buyers say this is the relative floor. And it causes the market to just stay in between that until that balance shifts to the buy side or the sell side. As long as that balance is in play, it's not going to break that range. So with that being said, when you do see existing corrective structures, especially ones that have relatively defined ranges to the top side and to the bottom side, what you want to do is calculate the distance of the range. In this case, it's roughly, let's just say it's $75 wide. You want to wait till the market gets to that midway point. And then what you could do is you can sell an iron condor on Thinkorswim. You basically right click, hit sell iron condor. And then what you do is you choose your 4 strike prices. For an iron butterfly, you just make your interior strikes the same price. Let's use round numbers to make it even. Let's say we think Netflix is going to be stuck between 475 and 550, $75 wide. Well, that means that $37 above 475, which should be what, 512? 512.50. So right around 512.50, somewhere around here, you would sell the 512.50 calls. Then you would buy these calls here, and you'd buy these calls here. So you're basically doing like a bear call spread and you do a bear call spread and a bull put spread. You're basically taking two spreads and combining them. And so you buy 2 calls, you sell 2 put, you buy calls and you sell calls, you buy puts, you sell puts. That's basically how it works. So you're taking 2 spreads and you're combining them together. So you sell your 512.5 call and you sell your 512.5 put. You would buy the 475 put. You would buy the 550 call, and you then have an iron butterfly. And what it'll do is it'll price it out like this. And so if you close between, say, like roughly here and here, by the end of the expiration date, you get a credit. You get a profit on that. If it closes right at the center strike, you get to maintain max profit on that. Anything in between this kind of break-even strikes here, you make a profit. If it closes above this, you start taking a loss, but your loss is capped at a certain point. If it goes to the downside, it's the same thing. The key things about this is that you want to make sure that your strikes are balanced. So if you have your calls are $37 apart to the top side, you want your puts to be $37 to the downside. Super, super important. The only difference between an iron butterfly and an iron condor is that from a P&L perspective, instead of the tent, it looks like this. That's it. That's an iron condor. And the difference is that instead of your two center strikes being exactly the same, they're a little bit wider apart. So instead of selling the 537 call and 537 put, you would maybe sell like the 550 put or the 550 call and the 475 put or whatever strikes you choose. But basically, these are the strikes that you're selling, and these are the strikes that you're buying. And so these are great strategies to trade when you're inside these corrective structures. If you feel like there's no earnings, like if there's no earnings coming up, no major news catalyst, no new tech being developed, no new announcements that would really kick up the volatility into these trades to the upside or downside, then this is a great strategy to trade. Another really good time to trade iron condors is when you go from like a high volatility environment like this, where the market's very imbalanced, impulsive, corrective, impulsive, and then starts to shift into a corrective structure after that. When you go from high impulsive volatility to low volatility, that's very beneficial for an iron condor or iron butterfly strategy for two reasons. One, iron condors and iron butterflies, you are basically want IV to go down. You want IV to go down. You want implied volatility to go down because your two interior strikes is your real vulnerability. And those are the ones that are worth the most because those are the closest to the at the money. If you sell them at a high volatility point and then volatility goes down, those calls and puts, those interior strikes that you're selling will also go down in value very fast. So you are basically short volatility in this case. You want volatility to go from high to low. And when does IV go from high to low? When you have an impulsive move that starts to move into a corrective move. So that is a really good time to trade it. That takes a lot more timing and precision and skill. So you're better off in trading these strategies just looking for an already established corrective structure, waiting for it to get towards the middle. And then you're going to sell the, if you're doing an iron butterfly, you'll sell the same call and sell the same put. And then you'll buy puts and calls further out. And if you're doing the iron butterfly, you're going to sell or if you're doing an iron condor, you'll sell a call and a put a little bit further than out of the money. And then you sell and then you buy deeper out of the money calls and puts. That's basically it. Some examples of already established corrective structures besides this one, Spotify. You can see we have a relative resistance here, 290, and we have a relative floor, 225. What do I look for minimum touches to feel like that level is established? Minimum 2 touches. You want a minimum 2 touches. And I don't mean like it touches and the next candle it touches. I mean it touches, it pushes away, and then it comes back and then pushes away. Why does that separation in time of those touches matter? When you have price action coming down into a level, if it hits a level and then the next candle it touches it, that means that that movement down is still testing that same level in the same move. But if there's selling pressure going into a support level and enough buyers overwhelm the sellers and push it up, they've established, hey, we are considering this a line in the sand, and we're able to outpace your selling pressure with more buying pressure. We are establishing this as a level. If the market then comes back to that level and those buyers say, get away from here, push it back up, we now know that they are defending that 2 times in time. It's not the same move that they're defending the level. It's, hey, we sent it higher from here. Oh, you came back again? Yeah, we're going to send it right back to you guys. That tells you that there's a strong cluster of order flow saying, hey, this stock or instrument is undervalued at this level. So I want 2 touches to the bottom side and I want 2 touches to the top side. We have it here, 1, 2, 3, 4, 5, and we have 3 touches to the downside. I have an established range. What am I doing? I have a 290 to 225. It's a $65 range. So I'm waiting for this to get, what would that be, around 257, 258, right around the middle. And then I'll look to sell that. I want to make sure that there's no earnings coming up by the time my option expires. I want the earnings to be after that. And ideally, the earnings are 1 to 2 weeks after my option expiry. Why is that? Because as we get closer and closer to earnings, options volumes start to increase. People are speculating that the earnings is going to go up or down. And therefore, I want to make sure that that increase in volatility doesn't affect the pricing of my options. So that is how it works out. Let me answer some questions while Neil is temporarily MIA. Okay. Is this basically selling both a debit spread and a credit spread? It's two credit spreads because you're selling the interiors and then buying the exteriors. Debit spread is where you buy the interior and sell the exterior. So you're selling two debit spreads. You're selling a bear call spread and you're selling a bull put spread. Are you guys taking this trade? I will show you one that I just took in just a moment. When Netflix gets there, it's not there yet, but I will look to do that. And same thing for Spotify. I will show you one that I have taken just recently. What is the symmetry important between the put spread and the call? Or why is the symmetry important? Because then you're balancing the strikes. So if you imbalance the strikes, let's say you have on your call spread, let's say you buy, let's just do even numbers, 100, 200, 300 to make it easy. Okay. Let's say on my call side, I sell the 250 and I buy the 300. Okay, that means I have a $50 spread to the upside. But then if I sell the 200 put and I buy the 100 put, I have a $100 spread to the downside. That's going to imbalance the risk towards the longer side. So you have longer side and shorter side. They're going to have different balance in terms of profit targets. So you want to make sure that they're even. If you don't, then it's generally it would be called like a broken butterfly or a broken iron condor. Basically, that's how it works out. You're imbalancing the strikes. The symmetry basically means that your max loss is capped on either side. Whereas if you aren't able to gauge which side is going to win out, well, then you want to make sure that whether it breaks to the upside or breaks to the downside, it's still the same max loss. If you create a larger max loss to the upside and it breaks the range to the upside, you take a bigger loss than if it had broken to the downside. The whole point of a neutral environment is you don't know which side's going to break and you don't want it to break. And so therefore you want to neutralize your risk as much as possible and even it out. So the symmetry is very, very important. Okay, let's take a look at the others. Genus is the original short squeeze long for AMC. Okay, it's not really relevant to this particular discussion, but we can get into that later. People as if okay, that's the same thing. What kinds of assignment risks do these irons have? Is this one contract, basically 4 contracts? So it's 4 legs. You have 2 legs to the downside and 2 legs to the upside. Your risk, obviously, is there is risk of assignment if it pushes to one side or the other. And to avoid that, I generally recommend just closing it out because you already know what your P&L is going to be. Are there times where you may want to be assigned to the upside or downside? Yes, but that's a little more advanced discussion, something we can talk about a little bit later as you've done 100 or 200 iron condors or iron butterflies. So there's always risk of assignment because you're selling your interior strikes and you're buying further out of the money strikes. So there is the chance that the market closes, like let's do the iron butterfly. Here's your break. Well, this is perfect break even right here. If the market closes anywhere between here, your break even point, and here, there's a chance you get assigned on this put or this call. Very straightforward. That is a possibility. So what do we recommend doing? Closing out the contract before it expires to avoid assignment. So yeah. Keep in mind, though, that the losses you have to the upside will be offset by a lot of the gains you have to the downside because one leg of the spread is going to be losing money while one leg is making money. So it will help offset some of that. Let's see here. Okay, copy that. That one's done. Can you show us an example of setting one up? Do you mean in the platform? Oddball Geek. Let me know in the chat below if they're there. Two Fitcom, I'm saying wish. Okay, let's see. Smash that. Drop the peeps. Drop the peeps. Love. GSK was 70% on it. Okay, that's not. Okay. Is there risk of early assignment? There is. Yes. There's always risk of early assignment, but that's why you can either close it out if it starts to get into the negative to avoid that, or just understand that you have the other side of the trade that could offset that. If you don't have the margin, you're worried about assignment. Once you get to your break-even strikes or past that, close it out. Just close out that one side or close out the trade completely. That's it. That's what you do. If you really want to avoid the assignment, just as soon as you get past your break-even strikes, close it out. I've had many a times where my iron butterflies or iron condors went past the break-even on one side or the other side. You got to understand that about 71% of the time, options contracts are not going to get assigned. Most people do not exercise their contracts. They usually close them out for profit or loss before that happens. So you're talking 7 out of 10 times, that's not an issue. Then on those few times that it is, assuming you have the margin for it, it's not really a big deal, because as soon as they assign you the shares of that, you just close it out. You take the loss right there. It's the same as if you close it out for profit, other than the fees and commissions. If you are trading a large cap stock, and if you were to get assigned the shares and it would be too expensive for you to hold that in margin, then close it out once you get past your break even. That's it. You'll take a minor scratch on the trade. No, very small harm done. Move on to the next one. So that's how you avoid assignment on that. Thanks for taking all 3 of my questions. Very informative. You're welcome, Ajum. And Neil's back.
Hey, guys. I had to go to the bathroom. It's all good. Everything came out all right, though.
Had to go to the loo.
All right, so guys, getting a lot of quality options education here from the man.
I have 3 minutes left. Can I use it? 2 minutes?
2 minutes. Minute. 2 minutes.
2
yeah,
minutes.
You get 2 minutes.
We'll do it in 2. Do you see the structure here? 2, 2, 3, 4 touches to the top side. 1 major touch there. Almost a second touch. I consider near miss, but I feel like there's a good base in here. So, is there a potential iron condor, iron butterfly in this trade? Yeah, I think so. I actually pulled the plug on this one, or not the plug. I pulled the trade on this one here earlier today. We did, I think, a 129, 137, 129. What would that be? 121 to the downside. So as long as it closes, I think my break-even strike is right around here and right around here. And it's for next week. So if by next Friday, Apple closes kind of in this range, I make a profit. If it closes outside this range, I have a loss, but my loss is capped to the upside and downside. So yeah, there's no earnings coming out. I don't sense any major news coming out of Apple between now and next Friday, and I can close it anytime between now and next Friday. So this is one that I recently pulled the trigger on. Apple, there you go. Apple looks great. There you go. There you go. Kenneth got it. Okay, I did it 1.5 minutes.
Okay. Chris, thanks so much for coming on. Guys, you guys have had some great questions. I wouldn't you agree, Chris, that there were some good questions here? Guys, if you want to get some more of this goodness, follow your man's Chris Capri, Second Sky, Forex, .com,
and Second Sky's Trading, the YouTube.
And Second Sky's Trading, the YouTube. Guys, last time I was on here, I went right over to the YouTube. Actually, let me share my screen. Let's go on right over to the YouTube. You guys will see my wait, let me see if I'm on the Benzinga account or the Neil account. Oh, it's the Neil account. All right, so it's all my weird stuff. Like building mechanical keyboards, Slavoj Žižek, and Hyperion. Have you ever read Hyperion?
I haven't.
Oh man, that is a good one. It's based on Chaucer's Canterbury Tales, but like 30,000 years in the future.
Oh, I dig it.
I'm single, guys. All right, so Second Skies, baby. Second Skies Trading. We just go over here and look. I already did it. I hit the subscribe, and I already got that bell on because I like to get my updates from Chris. So Chris, thanks for being on the show. We will see you next Monday.
Good seeing you. Be well.
You too, man. Okay. So yeah, Chris has got to hide from the FBI there. The NSA. Bagel. VJ, thank you for being here. Bagel. Some Sandra Wright, could you show me some stocks for tomorrow? AHT. That's my pick for tomorrow. Here, I'll do it right now. Ton of people behind this one right now. In the Twitterverse, tons of very powerful volume. Let me put this thing on the daily. I think it's at a good bounce point. All right. I'm long AHT. All kinds of ways. I like it. It fits my type of trading. I've been in here. I've been marking it up. I got my notes. But I like this type of stock. As you know, this is my rat snack AHT. What's up next, guys? We've got Moon or Bust, where we talk about all of your digital currencies, all your little cat coin. We got Buttercup coin. We got Skidmark. We got dirty shark coin. We got all your shark coins. Accidental spray fart coin. Everything is covered on that show by the Benzinga crew. Neil, can you give me a price target on Amazon this week? Amazon. I might not be able to do it right now. Okay, I got the daily. I mean, this thing is just trading in this channel. I might not be able to do it right now because we're out of time. But I would say come back tomorrow. Don't let me forget. We can talk about Amazon all you want, baby. All you want. But I mean, Amazon looks like it's setting up for a thing. Like, I'll tell you right now. Let me measure this really quick. I think that Amazon right now could pretty easily get to at least 3,409, which is like, it's not a huge percentage gain where it is right now. That's like 1.2%. But that's just resolution of its current price structure. Tune in tomorrow. We'll have a bunch of that. We'll get all your stock picks and stuff like that. I'm not sure who our guest is, but it'll be good. And there's a B. I think I don't know. He moved. All right, guys. Thanks for tuning in. I'm Neil Hamilton. Follow me at Neil's Tweets on Twitter. With us, as always, has been producer AB and our Monday staple guest, Chris Capri, the man of options and trading. Very experienced trader. So definitely listen every time that man speaks. Next up, Moon or Bust. Stick around. Don't go anywhere. You will be redirected to the next show, and you're going to be thankful. You're going to love it. So, as always, thanks for tuning in, and happy trading.